Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark will run down the major equity markets. Publisher of the popular blog Juggling Dynamite, Danielle Park, wonders why measures weren't taken during the last recession to rein in irresponsible behavior by major American banks. She also thinks governments should cut spending during so-called good times so they can respond to economic downturns. Natural resource analyst Sean Brodrick says while car sales in North America have slowed, they're still booming in Asia. He believes the U.S. dollar will drop in value while gold should go up. We'll talk to Ross Clark right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always a pleasure, Jim.
Precious metals, how are they doing right now?
Well, we finally got some volatility. This was the week that finished off with cruise missiles going into Syria. And with that, we ended up with a pretty big pop as far as any of the safe haven items were concerned, whether it be bond market overnight on Thursday night into Friday morning, or the U.S. dollar, or the precious metals. So gold got up to $12.73 late on Thursday evening and into Friday. So that became then a new high for the year. That takes us all the way back into November. But it had a hard time holding much of the gain, closed the day off at $12.56. And, you know, the one thing we've seen over the years, that anytime you have a period of conflict or the sound of gunfire, as I like to say, you tend to get these spikes in the precious metals. Then they give back a lot of that very quickly. You know, you go back to the invasion of Kuwait, the Falkland Islands, the bombing of Baghdad, even 9/11, where we got the spike up. The metals topped out within the next week and a half and started to ease off. So the activity we had on Friday, I'd be surprised to see much in the way of follow through next week. And if we look at the silver market, it ended up the day with a classic outside reversal. That was a new high for the move, and it closed below not only the previous day's low, but the lows of the last 8 days. So outside reversal like that tends to then say that that's more of a climactic move at the tail end of a run, and you could be looking for pretty good corrections. Now, we'll have some work done over the weekend to outline some specific key points on both gold and silver, and also on the dollar index.
The price of oil, did it jump up too if people are worried about supplies from the Middle East after the missile attack?
Yeah, we tacked on enough in oil here to be up through the $52 range, closed at 52 and a quarter. It's now retraced probably a good 60 or 70% of the decline that we had, down to that $47 level 2-3 weeks ago. From a technical perspective, it's now 9 consecutive days where we've been up, and typically you will see those type of moves then run out of steam, start to roll over a bit. So probably look for very little follow-through next week as far as the oil market is concerned. And, you know, when we think about what else moves with the oil market, I always think back to the Canadian dollar. Canadian dollar a couple of weeks ago was holding up very well as oil went down to 47. Canadian dollar was putting in a higher low, so a nice bullish divergence was setting up there. And we got a decent little pop in the Canadian into a week and a half ago. But as we started off the first of this month, you see that as the oil moved up through 50 to this $52 range, Canadian dollar is not participating at all. Canadian. So we're back into this negative divergence mode. So the probability here of the Canadian giving up more ground as we move through the following weeks appears to be very high from our perspective.
Yes, it doesn't seem to make much sense. If the price of oil is up, that usually drives the dollar up.
Oh, yeah. I mean, they're usually part and parcel. It used to be you could overlay the two charts and have difficulty telling which was which. But when you start to see these divergences set up, they tend to be very, very helpful, at least in the intermediate term, that being for the next, say, 1 to 3 weeks, that type of thing. They really help identify some of the turns.
Ross, you also have some news from our good friends from Institutional Advisors.
Yeah, Bob has an introductory offer out there right now for his service, and as the listeners will know, I write and contribute some of my material to Bob's letter. ChartWorks is part of that, and I'll be updating the precious metals, the bond market, and the oil over this weekend, and I'm sure that people would probably be interested in what we've got to say.
And you can find that at institutionaladvisors.com.
Yes.
Ross, thank you so much for speaking with us.
Thank you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Danielle Park, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome back to the show, Danielle.
Thank you, Jim. Happy April.
Danielle, I know the banks in Canada are the biggest generator of profit on the TSX. Is there growing pressure to split up the banks and their financial institutions in Canada?
Well, I haven't heard much talk of that in Canada, but there's a lot of that talk right now in the States because the Steve Mnuchin Trump pick has expressed, he's an ex-Goldman Sachs guy, but he's expressing support for the idea of return to Glass-Steagall and breaking up the selling side or the investment sales side from the banking side in banks, which was the case for many years, and they just merged in the 80s and 90s into these mammoth conglomerates that cross-sell us everything under the sun. And I think there's been, I'm amazed that it wasn't done after the 2008 fiasco, because we've had several, incidences now where it becomes quite clear. We had the debacle in 98 that was triggered from the Asian financial crisis, and that was the first time really that the Fed-led, that the Greenspan-led Fed stepped in to rescue, quote, rescue long-term capital management. And then you had the rescue again in 2008, which, was our perfect opportunity to make some substantive reforms in this runaway sector. But as you say, we didn't. They just bailed them out and continued. And now what we've got a scenario in Canada is that we have, this feeder fish sector, which really doesn't produce any actual goods or services in and of itself. It's a tax on businesses and households and the economy in general. It's even a tax on the government's finances because they basically pay underwriting fees to the big banks whenever they want to issue securities or raise money in Canada, even though they could do that directly, they typically do it through the big banks. So they have become, as you say, the most profitable sector. They represent some nearly 36% of the TSX now. So that is a huge overweight. And this is a sector which is not only trading at peak valuations, record highs, but is fully exposed to the Canadian housing market, to the over-indebted consumer, to things like the auto loan fiasco, which is becoming very apparent day after day, as well as, the whole rationalization still in the commodity side and the fossil fuel side, which has still got some sketchy debt on the books and bank exposure there. So we've really, if you think about the funds that have flown from the consumer debt bubble that started really in earnest in Canada in 2008, it really has made these mammoth entities over-levered and a great risk to the Canadian economy itself. And so I think, when we get into the next phase of bear market where the valuations begin to come down significantly, when we get into a period of slowing housing, as you are already on the West Coast, but of course, as you well know, the center of the country where I live has been, I call it Fruit Loops. It's just been crazy in this mania that's been going on around housing. So, once these bubbles break, I think we're going to have a good long look again at the outsized risk that the finance sector presents to Canada as well.
Yes, it's nice to know that the federal government is now paying attention to Toronto's housing bubble. They didn't care when it was happening out in the area of people who eat nothing but apparently tofu, wear sandals, and smoke pot.
Well, again, we go back to this nonsense that I hear regularly, which is, typically from the sales side in the industry saying that government has no role to play, should stay clear. I heard Brad Lamb having a meltdown. He's a condo broker, realty guy in Toronto, having a meltdown that the government can't touch the Toronto housing market or try and slow it down, or we're going to have a national recession. So they say these things in the same breath that they say that prices aren't overdone and that there's not a lot of risk. It's just nonsense. Another really pet peeve is, you hear them saying this is a great time to be buying or selling a house. Well, clearly it can't be great to be buying or selling. It must be one better to be a seller or a buyer. At every price cycle, clearly there's an advantage to one of those participants. And right now, this is fully the best time to be selling real estate, not buying it. So you're getting a lot. I think rents in Toronto have appreciated about 15% in the last year. They're literally pricing regular folks out of the marketplace entirely. So not only can they not afford to buy anything, they can't afford to rent anything. So you're getting this exodus of young people, of artists, people that bring great cultural, complexity to the city are saying, holy cow, we have to leave, we can't afford it. And then, they're being replaced by a lot of buyers who are just, sort of stacking them up like Monopoly. They aren't actually living in them. They're not actually making vibrant communities. They're using them as capital banks, basically money to store somewhere because it's fleeing out of places like Asia still. And this is essentially, at the margin, this is what's been driving this. There's two main factors here. There is the record low interest rates, which have gone on so long that people have just become so complacent with that. So there's that, and that's underwritten in Canada, as you know, by the taxpayer through the CMHC, which is insanity. So governments help blow this bubble up, and now they have to put in curbs and controls, which will undoubtedly help to deflate it. But that doesn't mean that making these actions to deflate it are the wrong thing. The wrong thing is even being that involved in the market in the first place, right? So as I say, people say, oh, you shouldn't touch the housing market. Those are the same people who have benefited from all the government intervention that has allowed this bubble to billow as much as it has. But the fact is that it's an untenable situation. People are only real people that are trying to live and invest and drive commerce within their local communities, within these towns and cities, and it's far beyond just Toronto. We're talking, it has bled well into the countryside in many areas across the country, this crazy pricing. But that is something that is costing us all dearly, and we know that they're doing it with record amounts of debt. So the people who are still reaching and who are still just trying to get a shelter over their head are buying at this very dangerous time. They're doing so with, think about it. The housing prices in Toronto have gone up, a single-family home, something like $300,000 more expensive to buy this year than last year. The average person does not have that kind of cash kicking around, Jim, as you well know. This is money that they are borrowing. They're doing 2 mortgages. They are, spending 60% of their household cash flow just to put the shelter over their head. Never mind car payments and all these other things. Never mind food. It's just ludicrous. And the problem is that it's going to cost us all a lot. And that's why I've been writing about it so much. This is a major problem for our economy, for our social programs, for our future spending, for our retirement savings. People are not able to save for everything else because they're so stretched in trying to just put the shelter component over their head. So, this is going to mean deficits of all kinds in the future. This is going to mean a plunge in tax revenue, when prices start to come off, because so much of government revenue has come from this sector, more than 60% of growth, and a whole bunch of government taxes have come on the backs of these transactions in the past few years. And once they dry up, as you know, in Vancouver, sales are already down something like 30% over the last year. And the volume of sales always drops in front of price. So price drops typically come later, but I think you're even starting to see price weakness in your part of the world. And certainly, you get, more incentive or more house perhaps for the same price point. But ultimately, prices do follow sales lower over time, and people are going to find that when they were stretching in this manic phase, they are, in over their head, and you're going to see mean reversion in price. And then all these experts that were counseling everyone, you have to get in, the buyer, get it money anywhere you can, just stretch, just get on the property ladder. Of course, they all pull back and say, oh, well, we didn't know, we were just agents. We weren't actually advising. We were just, making the transactions, and we weren't fiduciaries, and it's not our fault. And, they blame everything else. But at the end of the day, huge amount of waste of resources, and then big economic instability and deficits.
Danielle, on your blog, Juggling Dynamite, you quoted a real estate agent as saying, in Canada, people rely more on real estate agents for retirement advice than licensed financial consultants. Is that really happening?
Oh, well, if you think about it, it's absolutely the case. Most people don't have much savings at all outside, the main bulk of whatever net savings or equity they have is in their largest asset, which is the family home, right? And home ownership rates in Canada are up near 70%. Historically, that's been around 64%, Jim. And that 6% may not sound like a big deal, but it's huge. It's the difference. It's, for example, in the United States, the peak of the housing bubble in 2006, when everybody was getting a mortgage just for showing up with a pulse, because the standards were so loose and the securitization was allowing money to flow into that sector, in great excess. And so what you found is that all sorts of people were acquiring homes that was never going to be able to pay for them or keep them long term, but were just doing it in part of this frenzy. And so what you found is that percentage at the margin, along with these foreign buyers, as I say, money laundering at the margin, all these things are these forces that squeeze prices higher and make other regular people think they have to pay these prices to get in. So absolutely, most people don't ever get before a financial advisor, so to speak, but I say that word lightly because, as I point out in that article, financial consultants, advisors, most of them are also licensed salespeople. So their job is to get people to buy these products, do transactions. That's how they get their compensation. Really, the test of financial expertise over time, if you're adding any value, is part of it is at the end of the cycle, when the music stops, How many people have actually got net benefit, net equity, increased their savings, lowered their debt? That's how you actually measure success over a full business cycle. How many people actually are better off at the end of the cycle than they were at the beginning of the cycle? And unfortunately, that answer is very often few, because of the reason that I stated, that they are so, enamored of debt and overspending and not thinking about cashing out and paying down debt and taking cash out of the cycle. So, that's the thing. I always say when the tide goes out, the question is, how many people were actually net ahead at the end of all of the transactions and, furious activity, and that's really the test.
We'll have more with Danielle Park next on This Week in Money.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Danielle Park, president of Venable Park Investment Council Incorporated. Danielle, we've seen a federal government run up a $30 billion deficit. Is there any real economic benefit to a government saddling us with that much debt?
Well, of course governments sometimes have to do deficit spending to smooth out the business cycle. That's the idea, right? Because there is no such thing as perpetual growth or insatiable end to rising profits. All these ideas that people fall in love with during boom times, you always have the give back period. And in the give back period, you see a plunge in, revenues, both for corporations, which tends to lead to layoffs, so therefore for employees as well. Business income declines for small business owners, and tax goes down with it. All at a time when, the people at the bottom of that pyramid who have not been preparing for a rainy day or have not got emergency savings to fall back on taxpayers, right, onto the social safety net. So it is always the case that in that pullback or economic recession or slowdown part of every cycle, you get this drop in revenue and you get this increased demand for government spending. So as a result of that, intelligent management would suggest that in the boom phase, you do pay down debt and you do build up savings so that the government can afford to, have that drop in its income and to be able to fund the programs that are so desperately needed to keep stability in the social system. Unfortunately, as you well know, that's not what most people do. It's not what most individuals do. It's not what most businesses do, and it's not what the government typically does and hasn't done in quite some time. Many, many years, like many administrations, they have basically done the same thing every time, which is during the boom period, continue to spend, continue to, have all sorts of pet projects and not curb expenditures and not focus on paying down debt. And so they get into this period of the weakening revenue unprepared, just like regular people. And so debt issuance and deficits are part of that game. It's part of, instead of getting ahead of the cycle, it's reacting to the cycle all the time, being surprised when things get softer, always, unexpectedly being, sort of taken offside by these downturns, and it's just not necessary. But I think, not only do we have that cycle, this business cycle now in late stages and likely to disappoint over the next little while, but we also have the demographic cycle, which is likely to create debt for quite a while here. Why? Because there's been so many promises, so many entitlements expected of an aging population, so many people trying to take more and more out of the pot, and fewer people being able to put funds in. And so I think I'm afraid debt is going to be part of our problem. Now, I would submit to you that one of the things we have to do is look how to downsize government as well. The government size also increased with asset bubbles over the past 17 years. And then in the downturn, it's never scaled back enough. In fact, you tend to get, more agencies and more rolling out of more spending, thinking that governments can stimulate, enough by just, adding more spending. But ultimately, that spending needs to be brought back in line with revenues and income over the full cycle. So we have a lot of fiscal work to do. There hasn't been really prudent financial advice or management in many institutions, and the whole economics and academic profession. Everything has really been hijacked by this preoccupation with speculative behavior, with believing that prices can only go up, and that there never needs to be this pullback or reset phase. And as a result, we've sort of been hijacked by the crazy folks, and I'm afraid we need a bunch of realism and some intelligent management to come back into the equation and say, hey, we can't keep kicking the can down the road. Our pensions have to be topped up. We do need to increase funding. That means we do need to spend less now. The auto sector is another example of something that's been in this elation phase on debt over the past few years. And we've discussed before, as you know, Jim, they've extended terms, they watered down who qualifies for loans. They've put in something like 4,000 and 5,000 of incentives now on trucks and SUVs just to get people to get them off the lot. Well, even so, we're seeing a slowdown in sales in the auto sector in North America. This is typical. We saw this last in 2008. And then, everyone's taken offside because defaults start happening and inventory's not moving, and that's another major spending component in the economy. So, it's all pretty predictable stuff. This particular wave has gone on a really extended time thanks to the abuse of debt, which we haven't seen in these proportions really ever. It's really unprecedented. But unfortunately, that means equal and the opposite in the other direction is also likely to be unprecedented, and we should expect a fairly steep, stark mean reversion phase, and I'm just trying to let people aware of that so they can hopefully take some steps in advance instead of being wiped out again.
Is it a real indication of not just the future but the present? The city of Victoria is thinking of rescinding their bylaw that right now makes it illegal to sleep in your car because people can't find decent rental accommodation. Is Canada going to become a nation of people sleeping in their cars?
See, this is the madness personified, right? Victoria has had a huge influx of that foreign capital that turned away from Vancouver when you guys brought in the foreign tax out there. And, when I was out there in March, they were complaining that housing prices, like in my area of the world here in Ontario, have just gone, mad, completely mad. 40, 50, 60% jumps in 1 year. So yeah, this at the end of the day, housing is a fundamental staple, right? We need to have shelter. It's Maslow's hierarchy. We need shelter, clothing, food. These are just basic things. You want to have functioning humans that are supportive and productive in your economy, you have to have shelter. So this idea that it's this commodity, that it's traded, you trade it, you speculate, it's a pure commodity play, that's all nonsense. Historically, housing goes up over very long periods of time in line with the cost of inflation or the price of inflation. So 3 to 5% maximum should be all you see over the long run. So the fact that we've had these gain periods now of 10, 20, 30, 40, 50% a year over the past few years means that we have to give back all that 4 standard deviations above the long-term average where we are right now. That's crazy stuff, and that's got to mean revert. So that means, yes, people are in this mad environment, people are going to be struggling to have a roof over their head, and that is not supportive of a stable society. So we do need governments to wake up, to push back against the commission-taking lobby that wants this madness to continue, and start treating housing as the staple that it is to our society.
Now, the BC government might be part of that real estate madness. I've heard reports that they are renovating the outside of BC housing high-rises to make them attractive to private investors who then will renovate the disabled and handicapped people who live in those buildings.
Yeah, well, this is the time we're living in. It has become this obsessive culture about, as everything's a trade, everything's a flip, everything's a speculation. This is very non-productive and actually destructive of everything that we need. So I know it'll come to an end. It did in the 80s when, the whole Japanese investor craze, foreign capital fleeing there, drove, everything crazy over in this part of the world. And then ultimately it comes to a screeching halt from a whole bunch of different influences, some of them being tax changes, some of them being just buyer exhaustion because they have too much debt. We're something like 8 times the average household income now in Canada for the average home price, and in the long-term norm is about 3 times. So we're way past affordability for most of the population here. And if you want, do we want to live in a country where everyone's thrown out on the street and robber barons are running the place? I mean, we have to come back from the brink of this madness and think about long-term what is supportive to a society. And we want the young people to have a decent start. Trust me, we've got a lot of old folks needing support here, wanting benefits. If we don't get the young people on a solid footing, get them out from under debt, get them into household formation that they can afford, we are going to pay for this for decades. And that is a big problem.
Also on your blog, Juggling Dynamite, you talk about the worker bees are not retiring to let the young ones come in. Is it a case the older people just can't afford to quit working, or they just want to keep doing it because they like it?
I think it's a lot more of the first thing. It's some people, of course, yes, they're living longer, 80, 90, and of course they have a longer productivity than when they used to die in their 60s. So yes, there's a reason to work longer for sure. But having said that, the issue is that, so they're keeping their jobs longer, that's holding younger people back from getting into those higher paid positions. And also they are expecting to pass down their assets at peak valuations without the younger people having the jobs or the wages to be able to afford it, with the younger people heavily indebted, and with underfunded benefit programs. We didn't plan for this period properly. The boomer generation has been very bad at saving and funding things, and now there's this huge amount of people needing to take out of the pot, as I said before. So yes, we have a worker bee population, which is, every hive needs a lot of worker bees to support the ones that want to just be, or feel they've earned their time of being static. And as those people move into retirement, we need to have productive workers and tax dollars and all that good stuff to support them. And that is a major imbalance right now in our society in Canada.
Donald Trump has passed administrative bills that allow coal companies to dump their waste into rivers again. He also removed the auto emission standards set by President Obama. Republican Arnold Schwarzenegger says he just can't support someone who does that.
What I found refreshing was he is a fiscal conservative, he is a Republican, but he also sees that without, back to this Maslow's hierarchy, without a clean and supportive environment with viable water and air, we will not have anything else. It is absolutely foundational. Something like 3 million people are dying a year from just air pollution. Never mind all the other, climate change calamities which are everywhere. So he just said, he is a long-standing Republican, but he also is a human who understands we need to protect the environment. We need to clean up a lot of the mess that's already here. And he apparently told Trump, I can't vote for you, even though you're the Republican candidate, because you want to bring back coal. You want to go back to the dark ages. And he said, soon you'll be wanting us to, have a horse and buggy again. I mean, this is madness. And of course, as a governor in California, Schwarzenegger was very pro for, green energy initiatives and trying to clean up and create a healthy place for people to live there. So I just thought it was refreshing in this world where people seem to just declare their party affiliation and then turn off their brain. Whatever leader happens to come along, whatever nonsense they're spewing, they go, well, that's my candidate, I have to support that. And I think we're in a time where individuals have to take a stand and say, I'm not just signing up with any nonsense that's going around. We have to think as a team, as a human species, and we have to be a lot smarter in how we utilize our resources and what resources we look to rather than doing self-destructive things all the time. So yeah, I thought it was a good interview.
Danielle, thank you so much for being on This Week in Money.
Okay, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Coming up, Sean Brodrick next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Sean Brodrick. He's a natural resource specialist and analyst with the uncommonwisdomdaily.com. Welcome to the show, Sean.
Thanks very much for having me on.
What kind of market reaction did we see after the Fed talked on Wednesday?
Well, not a very good one. I mean, we saw a huge lead in the Dow just completely fritter away. Everything went negative. Or I should say in the major indices, things went negative. Things that reacted positively. Well, we saw gold, which had been at least $10 off, move higher, not higher for the day, but well off its lows. In fact, some positions of mine did quite well. And silver, the same thing. Another thing that reacted well is those oil stocks that pay high dividends. So I think people are thinking that if the Fed is going to reduce its balance sheet, which is what it is talking about, it may have less flexibility in raising interest rates. So that was the big news, was that the Federal Reserve said that they have plans to reduce the $4.5 trillion balance sheet the Fed has, but, you know, plans and reality can be two different things. I don't think people should worry about this that much. I mean, the market was really due for a pullback anyway. I think it was just looking for an excuse. It has one. Longer term, things look good. Let's hope we get a really good pullback so that we can pick things up cheaper. That would be nice because the big trends tend to look pretty good.
I know people say, or we expect, higher interest rates in the U.S., but can the economy in the U.S. withstand higher rates?
Very much. Higher interest rates are a bugaboo that, they get raised, all this stuff, because people have all these economic models. It doesn't really matter. I mean, what really happens are the real rates, and the real rates are still going to lag, and so you will find that the Fed is not raising interest rates fast enough, even if it does. And so there'll still be plenty of loose money floating around. I mean, the Fed could go on some kind of interest rate hiking jihad, and that would be bad for everyone, but I don't expect that to happen. So I expect things to move along quite nicely. We'll see what happens. The market is really waiting to see what happens with the stimulus plan. You'll remember President Trump talked about spending $1 trillion on stimulus, and also the tax cuts, very important. What can they actually come up with? Now, originally they were planning on having savings on health care to offset some of the tax cuts that may not be happening, so I'm not sure what they can do. So it's actually kind of a mess right now, but that doesn't mean things can't work out, and if you're bullish, you might want to buy the mess.
It's interesting that you bring that up because Trump didn't get his health care plan through. Other roadblocks come up. Everybody thought it would be easy for him because he's supposedly a Republican and the Republicans will go along with him, but they're not doing that.
Well, no, because he has the Freedom Caucus, which is basically the Argue Against Everything caucus, and they are the people who have railed against government for so long, and yet somehow they end up in it. And that does not seem to please them at all. But that's okay. no matter what happens, there's still going to be plenty of ways to make money. We're seeing general commodity bull markets. Things move around in all sorts of things. I mean, not just gold, which I talk about all the time, and silver and stuff like that. Oil is held up very well, all things considered. I mean, and we hear now that some oil supplies which had been stored in the islands, in the Caribbean, that's been drained. So there are some bullish factors in the oil market now. When you look at things like copper, you know, we always call it Dr. Copper, right? Dr. Copper's looking pretty good lately, you have to say. Palladium looks strong. You have to look at that too. Now, palladium is really, that tells you the health of like the car market, and I know that in the United States anyway, the last month's sales were not good, but I wouldn't let a 1 month in one country set you off too much. Over in Asia, car sales continue to boom, and so things look pretty good there. So we haven't seen copper break out yet, which is really what you want for a real indication that it's, you know, clear sailing ahead. It's still trapped in this range that it's been in since March, but it really seems to be basing right here. It seems to be building up what I call a energy field. And so if we can get copper to break out to the upside, that would be good news for, you know, global economy, that kind of stuff. A lot depends on China, sure, but there's other places in the world too. And so I think, you know, there's a lot going on, at least in the commodity complex. It looks pretty bullish. And so I've been using pullbacks as a chance to add in like my own portfolio. And I think that's what people will probably be doing in these kinds of situations. You can also buy breakouts, that's riskier. But, you know, you have to know what your own stomach for risk is. But there's not as much risk in that area as there used to be in oil, in copper, in precious metals, in the things that go into cars and the things that go into houses. You know, it all looks pretty good, really.
How has the U.S. housing market been doing over the last few months?
It's actually been doing pretty well. I mean, we saw good sales and like stuff like that. Now, every now and then someone will come out and say, well, interest rates are going up, and so that's going to choke off home sales. And I guess at some point it will. But you have to remember, you know, I mean, comparatively speaking, interest rates are still pretty darn low. So it could be quite some time before anything gets choked up. And in the meantime, when people say interest rates going up and they're thinking about buying a house, what do? They go out and they buy a house because they want to lock in the rate before things go higher. Now, there is one thing that could hurt the housing market, which is China is really leaning on its citizens, which are taking money and heading over here to the U.S., to Canada, and like stuff like that, and just scooping up houses left and right. It's really leaning on them now. We hear anecdotal reports out of China about this. And so that could be, you know, that could be something that slows down the housing market there. We'll have to keep an eye on that. But aside from that, otherwise, things look pretty good.
Well, Chinese people have been very creative in finding ways to get money out of the country, something they've been doing for 5,000 years. Why would they stop now?
Right, exactly. And when you look at the fact that that the Chinese government, they have a ruling council. It's not a parliament. I forget what they call it, but anyway, everybody in there is at least a millionaire. You know, so they obviously like money. They're doing very well. You can say that they gain that money by nefarious means, maybe, but obviously, you know, besides a few high-profile cases, most people seem to just allowing them to do it and just move along. And so, yeah, you know, I mean, they keep making noise about all this stuff. Like I hear that the Prime Minister from China is not a golfer. He doesn't want people in the government to golf because he thinks that looks bad, you know, because everyone's out golfing. On the other hand, you know, I haven't heard any bad reports about golf courses in China. They're actually doing quite well. So, you know, we'll have some pushback, but generally, you know, they are born capitalists over there. And so that's generally good for the global economy, I think.
And, of course, currency restrictions have a hard time as well when we have cyber currencies like Bitcoin.
Yeah. Well, it's not just Bitcoin anymore, is it?
No.
I mean, there's all kinds of cyber currencies that are moving out there because the Chinese seem to be leaning on Bitcoin, but as they do that, 5 other cyber currencies spring up and become more active over there. Now, personally, I'm probably never going to invest in cyber currencies. I don't hold it against people who do. It's just, I'm a hard resources guy. I like things that I know are real. And to me, I'll just be the cranky old guy shouting at kids to get off his lawn because I just don't trust that kind of thing, especially when a cyber thief can steal it off an exchange, as has happened in the past. But that doesn't mean they can't do well, and they seem to be doing it incredibly well. And part of the reason is because of China's crackdown on people shipping money out of the country. So China may not like these things, but their own efforts to actually restrict it is helping this stuff out.
Canada ranks number 4 in the world when it comes to money laundering, according to international forensic accountants, but number 1 is the U.S. Do you think that governments in Canada and the U.S. have the guts to really stop this money laundering?
No. I mean, I could go into it longer, but, that is part of what built Miami, is money being laundered through there. That's the reason why that's the city of skyscrapers, is because the people who were laundering money just had more than they knew what to do with. I don't think they'll crack down. Frankly, if anything, I think the people in the current government are just like more paranoid about this kind of stuff than other people might be, and so if anything, they're more likely to restrict it. Now, I'm not in favor of illegal activity at all, but on the other hand, you can't just pretend that this money doesn't exist. Of course it's going to flow around. It is going to flow into things like gold, too, right? I mean, it is, and that's going to be part of the thing that boosts gold, boosts silver, and really makes things flow along. And so I think that, we can argue against it till the cows come home, or on the other hand, we can really do well with it. One thing that looks like it might have topped recently, by the way, is the U.S. dollar. It was really trying to get higher, and I have 3 reasons why the U.S. dollar is going lower. And even though the dollar has had a decent run recently, there are things that are holding it back. The dollar is in a downtrend that started earlier this year, but we are seeing lower lows and lower highs, and that's the definition of a downtrend. And so we've had a decent little rally here in the dollar again. It's probably a rally that's going to peter out sooner rather than later. And of course, what is that good for? That's good for the things that are priced in dollars. That's all sorts of commodities, not just gold, not just silver. Other things that are priced in dollars tend to go higher when the dollar goes lower. And so, as someone whose largest investment it has to be the U.S. dollar, it's not like I'm pleased with that, but it's not like you can ignore that kind of thing either. It seems like the U.S. dollar is in for a rougher patch for a whole bunch of reasons. And so you just have to learn to adjust your expectations and just be prepared for that wave when it comes.
Sean, how can people sign up for your newsletter?
Well, the funny thing is, it isn't out yet. You know that I changed jobs. I used to be with another company, and just last month I joined Uncommon Wisdom Daily. But one thing you can do is that you can point your web browser to newgoldbull.com. That's newgoldbull.com. And you can sign up for whatever they're rolling out for me. I have some great picks. I was at the PDAC, and I was talking, I think I tallied it up. I did interviews with more than 24 junior explorers, developers, and miners, many of which I got on video. And so I'm just chomping at the bit to release those picks. And these companies, we're at the right part of the cycle for them. That's the thing, because now finally people can see that, yes, gold is back in a new bull market. That means that they take money, the big banks, which were sitting on their bags of money for a very long time, they're opening those bags of money, and they're handing it out to the junior companies to head out and do some exploring. That frees up a whole bunch of things. And the big companies haven't filled their pipelines, and now they have to. And the way they do it is they have to buy, future production from these junior explorers. And that just happened with like Exeter Resources, which is a company that I really followed for a long time, went down to their projects in Chile and the one they previously sold in like Argentina, and I wrote about both of them, and I had subscribers in them, and that thing just gained 67% in a day. And that happened when Gold Corp came along and scooped it up, and I kept pounding the table about, this is the largest gold copper deposit that is known to exist in the Western Hemisphere, and it's been de-risked. And that's why it was such an irresistible bargain for Gold Corp, is because they have had their hands slapped quite a bit, as all the big companies have. They needed something that's lower risk that they could pick up what is for them a song and just do it. But there are others like that. There are other projects like that that might not be exactly the same. Some are much better in their location and stuff. They might not be as low risk as like this big project that Exeter had, but they still have so much potential. There's going to be M&A activity going forward, and I'll be talking about that and giving a lot of picks on that. And so, if like people head to newgoldbull.com, that's where you can sign up. One more thing that I'll give, because I know that you're in Vancouver, is there's a mining and metals conference May 5th and 6th, and I'll be speaking at that, as will some people who are much smarter than me, and some great companies will be there too. So I think people should check that out too. This is the time to go to those kind of conferences, because this is when you want to put your shopping list together and really start to pick these things up on Colbex.
Sean, thank you so much for being on This Week in Money.
Thank you very much for having me. I had a great time, and it's always good to talk to you, Jim.
My guest has been Sean Brodrick. He's a natural resource analyst at uncommonwisdomdaily.com. He was speaking to us from Delray Beach, Florida. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Danielle Park, and Sean Brodrick, and thank you for listening. If you have any questions for us, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.